All right, everybody. Good morning. Louis Borsellino, Man of Market, and Anthony Borsellino here with you this morning, and all our people around the globe that join us every morning, and our Pat Tabbitt. We got Reed and Chris Kahn and Charlie Cochran. We got everybody that helps contribute to get all the information out to you, and hopefully to make your trading experience a better experience. So, uh, just a little this morning. Not much out in the way of news. Everything you're hearing on TV is about China and how China is affecting, the U.S. Markets and global markets more. As far as is there going to be a global recession? Commodity prices are low, so everything seems to be revolving around the world's second largest economy and how it's progressing, and if it's really causing that much drain on the rest of the country. I'm sorry, the rest of the financial markets. Um, we're up. We're trading up higher today, about almost 1,000 points. So we've been fluctuating between there. Also, we've got a mixed bag with the other commodities that are trading. I'll bring those in a little bit. But exactly what we're going to look at here, and I'm going to use this chart that I've been using for a while. But you know what? It is what it is. And if you're trading the ES, you got to be aware of the dynamics that are affecting this market, right? So I'm going to share my screen. We're going to click on here and share. All right. So, I take a look at this screen right here, and remember what I did to get to this is I took the all-time high of 2134, and I went back to October, a significant low right here. This significant low was last year, October, which was this is for the benefit of the people who have not been following. So 1813, okay. And then I go and I look over here and see how we had that spike low just recently, right here, right? This spike low down to 1831. That was the day that we lock limit and the circuit breakers went into effect, right? So then I do a Fibonacci top to bottom, and when you get back and you take a look at that, right? A 50% retracement would be this 1975 area, okay? And a 78% retracement would be this 1881 half. And if you can see, most of the trading has been taking place inside of this. And this happens to be what we're talking about, consolidation, right? We got big ranges. We're starting to consolidate, and the market is, if I take a look at this, we've been making, even with Fed Day last week, we've been making higher lows, right? So this is giving, to me, it's giving it, without any surprise. And how much more negative news can we get? I mean, the Fed basically just held steadfast. Doesn't like the economy. I mean, doesn't like that there's not the 2% inflation growth. Does not like the fact that there's a lot of volatility around the world markets. It's basically keeping and holding steadfast at their interest rates of zero. And so they want to see more data showing that the market is in a positive state. Economies are improving on a global basis before they're going to raise rates. So where do we have to go to get yield? We have to go to the U.S. equities markets, which I've said before, in the dirty laundry, we are the cleanest shirt. So the flight to quality has not only been to our bonds, but it's also been to our stock market. So, you're going to keep hearing that from me until that changes. So the important thing is, are we going to sustain a rally above this 1974 half? We are now we're spending 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 19, 20 trading days within that range that I versus, look at this when we made the low down here, right? Made the low, and we went 1, 2, 3, 4, 5, 6, 7, 8, and we just kept making higher, uh, higher markets, right? Then we went up and made the highs up here. Then we finally had some consolidation. As you can see here, there was consolidation, all right, between the 23.6% and the 50% before it went up and it made an all-time high, right? So this consolidation for me down in this area is telling me I think that the market, and especially if we get any sort of good news, better than we're getting now, I think the fourth quarter is going to be robust and we're going to get some good economic data. And I think the indexes are going to trade higher on the year. So that's where we're at currently on a more global look when I look at those markets. Okay, let's talk about the S&P day today. We're talking about a value area high of 1961.5. We got a point of control here at 1957. This blue shaded area was our middle, which is going to be 1959 to 1956. This is the middle from Friday. And then we have our 5-minute pivot right here at 1955.75 and a value area low of 1948.25. All right. So I got, I got a notification from the other day, and you have to understand something about certain things. All right. So this 5-minute pivot to us is always an indication of near-term and near-term market trend changes. Okay, and as you know, markets are fractal. So what a 1-minute chart and a 5-minute chart versus a 15 and a 30 and a 60 should look the same over time periods because the markets move up and down, right? So this is something we've developed. It's something we track, and then we kind of look at with our, CSI. Now, in times of high volatility, and I put out to you that the 5-minute pivot has been violated. Okay, to us, it's an indication of where the market can go, right? So, I'm going to give an example, and when it's volatility, and I tell you to sit on your hands because unless you got a stomach to sit through 3,000 and 4,000 point rallies during Fed days, right? So let's go back to over here, and I'm going to kind of bring you back to the Fed day of Wednesday, if I could find it, or Thursday. I'm a little trouble here. I think this is it right here. All right, so look at this. It rallies up, okay, it makes a high of 2011.75. We take out our pivots, because of the long, the rally. And then, what does it do? Bracket M takes it all back and takes out the pivots again. So during volatility, you got to be really careful about when I tell you that, when you've heard a 5-minute pivot switch, all right, you gotta, the best thing is when you have a change of trend, is what I like to look for is a retracement to sell versus trying to sell it right away, right? So markets that don't just sometimes they trade like that, when there's news related, right? So when I look at the rest of the market today, I'm taking a look at, we've got here's the Russell 5-minute pivot is in a buy. We have to take out the 11.66.25. All right, we've got to take out 16.369 right here for the gold. I'm sorry, for the Dow, and then the Nasdaq is testing it right here at 43.3660. Okay, so all these 5-minute pivots, along with the S&Ps, are sitting in a buy right now, right? And we've come off the lows of the night, and we went up, and they're retracing. If we get a 5-minute violation of the pivot, then I'm going to take a look here at the CCI and see if the CCI is actually starting to move right here. See how it's been solid green all night, but we've gone and we've got the MACD in here, right here, right? So this is like when I get our trading manual out, it teaches you how to use these things and look for setups. So right now, if this is going to gray, there's a possibility now that the trend is changing for the near term. And I look for for opportunities for failures, and that's how I use these indicators to give me an idea what I should be looking at. All right. So let's take a look at the overnight action. Okay. So the overnight action, we've got a high right here of 1964 and a quarter. Okay. Which did not take out 1967 half, which was Friday's high. And then I've got a low, all right, of 1938 half, which looks unfinished to me based on, you see the three letters across the board here. Now I'm gonna make these bigger because I know that on the screen it's hard to see them all the time. Okay, so all right, we made this low of 1938 half. This looks unfinished to me based on a profile point of view, and I'm looking at the market. It's going to have a, I say this a lot. I think we're going to have a two-sided trade today, even though they were up 11 right now. So currently trading right here at 1967.75. I'm sorry, 1957.75. So, I think there's a lot of, there's still a lot of volatility in the market. And now that the Fed has basically said they're going to wait and see, right? So we got the yes trading up 750. We've already, reversed from off the highs here, right? So we're back inside value, okay? And we're testing the point of control from Friday, all right? Right here at 55.75, we got the 5-minute pivot, and it's also the bottom of Friday's middle, okay? So, looking, if we take out this pivot, I'd be looking for the market then to go back up, try to test the top of value. Okay, if we test the top of value, and this market is firmly trading in the middle right now. I mean, this is really, when you take a look at it, here's the VWAP, the value weighted average price. Okay, and this was the one standard deviation, and we bounced off two standard deviations, and it's kind of reverting back to the middle, right? So given that, if we cannot take out the top up here, then I'm thinking the markets can go back down here, and it's going to test the bottom of value, and then ultimately go down and try to test the Globex lows. Now, if we firm up there and then can get back out above 1961 half, then that is a point where you got to stay with the trend. So you just can't, there's not just one thing that you got to look at. Now, remember, the other important things for us is always, can you take out the Globex high or low? So, if we get up here and we fail and can't take out this Globex high, for me, that's a real strong indication that we're going to move back to the other way. Now, we go back and we take out this Globex low and it has to be significant. It has to be at least 6 to 7 ticks taking it out for us to give it credence. Okay. Now, if we go down and fail down here, then then I'm looking for the market to move the other way. So, I look at the Globex highs and lows. You look at those overnight sessions. I look at our indicator here. This green turned into a gray right now. The market's firmly in the middle from the overnight trading action. So you got to kind of, it's at the top of the middle. So we got to see what's going to happen on the opening and see if it has enough momentum to go back up there and take out those highs. All right. If you got any questions, make sure you get them out there. And just because I'll put out that there's been a pivot change, all right, that's an indication for you to a heads up. There's a heads up going on, right? Not, all right, jump in the market and get short, right? All right. As far as the other markets, let's take a look at what else is going on. Here's gold. I put out a thing today about supply and demand on gold. So, basically, you know, people try to tell you it's a function of supply. Well, it's not. Okay, remember that. All right, so 40% of it's used in jewelry. What is jewelry? Number one, to me, jewelry is things that people use to give gifts, but they also look at it as an investment because guess what? When times are bad, where do they go? Pawn shop. Okay, so remember that. And then 40% is investment. Now, people are investing based on what they think inflation is, based on what they think, you know, how strong the dollar is, based on what they think if they can get out of gold, and you know, you got raising interest rate environments. Okay, governments buy gold as a hedge against the instability, right? So gold is a demand product, and based on what demand is controlling the market at this point, that's where people are placing their dollars when it comes to gold. Only about 10% of it's used, of the supply is used in like for conducting sort of any electrical and wiring and chips and things like that. So you know, gold is, you know, been under selling pressure this year, and the dollar has been strong, so people are out of gold and into the dollar, right, trying to make that play. And then the fact that, you know, if we get a rate cut, a rate hike, that's going to make the dollar even stronger, which could put the pressure on the gold to go down under 1,000. Okay, and so it's a very interesting market. Bull bear zone 1137.30, bottom of value 1136.30, and then we've got point of control 1137.20. All right, so that's my opinion of gold. All right, ZBs. So bonds, you know, kind of retreating after the news that the Fed was not gonna, you know, hike the rates instead fast. We're trading inside value. We're below our bull bear zone of 153.19. Point of control over here is 154.25, and then the value very low is 154.17. Any sort of news that would, you know, put off that the Fed will wait to 2016, which I think it's going to start coming out soon. You're going to see bonds get back up there in the 160 area. Okay, and then all right, so you know, you got Goldman Sachs coming out today saying they think oil prices. Let me move this so we can see it better here. All right, so we're trading above value. Oil above 140.45.33. I think that, you know, the thing that's going on with oil ends up being, you know, everybody's got this magical $50 in their mind. You got Goldman Sachs come out saying that oil could trade down into the 20s because of global recession and overproduction. That, you know, oil could be in the 20s and stay there for 15 years. I don't know. You know, I'm just thinking. I think oil is under a lot of pressure, a lot of overproduction, and I think that the market is heading down. So trading above value right now. Bull bear zone 45.29, point of control 45.53. Let's see. You know, we're starting to get into that. You know, is it overbought? But you know, as you can see, the VWAP. Okay, and our moving averages are moving straight up still. So these are the kind of situations where you say, well, you know, I like to jump up. When these things start flattening, okay, get here, you're flattening, then that's when you want to look to see from failure. If you really bearish oil, you want to fade that. So that's about it. I think the market is, you know, right here. We're still trading in a range. I'd be looking for the market to go back down and test the bottom of value if we get through our 5-minute pivot. Okay, and if we do get through that 5-minute pivot, I'm looking right now at what is this? The Nasdaq is just took out its 5-minute pivot. All right, so we've got a pivot change here. As you can see, the 3 red dots, and it's now moved back up to the top. All right, so now I got a Nasdaq taking out the 5-minute pivot. And it's the only one that has. So to me, this is an indication we're going to get a choppy trade until the market makes up its mind this morning. Okay, all right. You take a look at here. The S&Ps have now moved down to CCI. We got it going from green to gray. So, you know, it's going to test its 5-minute pivot here. Okay. So this could be indicative of we're going to get a very choppy trade. So I'd be looking for the market to move in different extremes. When we get to the extremes, then we're looking to sell or buy the extremes with the market moving back to the median. Okay. All right. You got any questions, Anthony?
Nope.
All right. All right. All right, everybody. Have a good day trading. And, you know, we're starting to get more of this stuff out, more news on the trading program, and getting stuff out on the Ninja Trader ecosystem, and all good things. And we're going to be moving our offices this week to a great place, bigger facility. We actually have a workout room right in our training, right in our office. So we'll be able. I'm gonna put up a punching bag with the market charts on it. This way, when I get aggravated, I can do that, or maybe just my own face because I could be mad at myself, and different things like that. So anyway, have a good day trading. Stay with us on Twitter and get our updates. All right, everybody. I will talk to you soon, and good luck. Bye.